Hello everyone. Today in this session, we are going to complete whatever we started in the last class relating to liquidation and distribution of assets at the time of liquidation of a company. With regard to the last class, we already completed understanding what are the basic tax implications upon distribution of assets by the company at the time of liquidation. So in that scenario, we already understood how the section operates actually. I will first in the first initial 10 minutes, I have some points to revise, which we have already started in the last class. And there is every chance that a student can forget these points. So I wanted to take a word of caution to repeat these points one more time for the initial 10 minutes. And then we will be going into the next aspects of the liquidation of companies and distribution of assets at the time of such liquidation and the tax implications in the hands of shareholders. Before going into this, see here, there is a company. Company balance sheet look as under. Okay, see here, there is a company and the company balance sheet is looking as under. Assets 100 lakh, 50 lakh. Okay, assets means assets other than cash. Okay, next, share capital, obviously equity share capital. Equity share capital 70, or let us take 50. Accumulated profits, variety of reserves put together are another 50. Okay, this is the situation of this. Oh, sorry, assets. Okay, share capital 100, accumulated profits 50. This is the balance sheet of a company. Okay, well, listen. First point number one, whenever company distributes these assets to the shareholders of a company at the time of liquidation, this will not be treated as a transfer. Thereby, section 45 charge of capital gains tax will not get attracted. Because of this, computation under section 48 won't get attracted. Because of this, capital gains won't get attracted. Okay, so it is not a transfer. Section 45 won't get attract, 48 won't get attract, capital gains won't get attract when the companies are distributing the assets at the time of liquidation. In these assets, two types can be there. Number one, capital asset. Number two, non-capital asset. Anyway, if it is a non-capital asset, capital gains tax will not be there. What will not be there? Capital gains tax will not be there. Okay, if it is what? If it is a capital asset, if it is a non-capital asset. However, there is a small exemption to this section from that. That's why, notwithstanding anything contained in section 45, means if there is anything repugnant or going against to 45, 46 only should prevail. Okay, sir, forget about the notwithstanding clause. Let us first discuss about the basic tax implications. I said now first 10 minutes I will revise. Listen carefully. This will be helpful for you to understand the continuity for the today's class. See here, what they said, assets are distributed to the shareholders. Okay, now question, what are the assets here? Cash is one asset, other assets are assets. 150 lakhs worth of assets are there. What is the accumulated profit? 50 lakh. What is the share capital? 100. Question number one, why this will attract deemed dividend under section 2 class 22 subclass C? Okay, last class we discussed that it will be deemed as a dividend. I did not tell the reason why it is deemed as a dividend. Correct? Okay. We will discuss all those. But before going into that, point number one. It is not a transfer in whose hands? It is not a transfer in the hands of company. In the hands of company. Why it is not a transfer in the hands of company? That's the question. Okay. For that, I told you one reasoning already. Sorry, it is a transfer in the hands of company. Okay. Now company has to pay the tax. Yes. Where is the company? Once liquidation is over, company is no more in existence. Next year to pay the tax, who will be there? Therefore, company are not in existence. Who will pay tax? Therefore, non-existent entity cannot pay the tax. Therefore, they thought that it is better not to charge a tax on company. Let us pass on that to the shareholders of that company. Whatever we already discussed. Okay. So therefore, whenever the company distributes its assets on the basis of liquidation, okay, at that time it will not invite capital gains tax on the company burden. So in the hands of company, there is no capital gains tax. It will not be regarded as a transfer. It will not be regarded as a transfer. Okay. Listen, I will expand the example. In these assets, debentures of some companies are there. Some land and buildings are there. Some other things are also involved in this 100. Now question number one. To one of the shareholder, you gave debentures, 1,000 debentures you gave him at the time of liquidation. Okay. Now my question, listen carefully. This is very crucial. Put all your senses here and listen carefully first. Okay. Listen carefully. There is a company. This company is having debentures as assets, investment of debentures. Okay. 1,000 lakhs. In this 100 lakhs worth of debentures, it gave to Mr. A. Not at the time of liquidation. Normally it gave. Now tell me, will there be a capital gains or not? Yes, there will be a capital gains. Why? This asset called as a debenture is going out of the company. Means company is making a sale of debentures. Company is selling debentures. When company sell the debentures, they purchased it at 100 lakhs. They sold at, say for example, 120. At 20 lakhs is a capital gain. Now question number two. Okay, question number two. See here. See here. Assets are there. In this, what is also there? Debentures are also there. Now question. Company purchased these debentures. Company purchased these debentures at 20 lakh. On the date on which liquidation time they are distributing to the shareholders, the value is 25 lakh. Value is 25 lakh. Whether company received money for that 5 lakh or not, I am not asking. Full value of consideration, whether you charge house property law, what we will do, whether you charge rent or not, I don't care. Annual rent will be municipal value fair rent, whichever is higher, fair rent standard rent, whichever is lower. If you charge, okay. If you don't charge, whatever is higher and lower, I will charge that as an income. Who asked you to collect? And your collection is nothing to department. Full value consideration concept. Are you understanding or not? Whether you have given taken money or not, that is none of my business. Okay. Now, technically, what company has to do? Normally, if company would have sold 20 lakh debentures or sold by company at 25 lakh, on this 5 lakh, they have to pay the tax. If you consider this example, correct? I purchased at 20 lakh. Now the price is 25. If I sell, I will get that extra 5 lakh. On that company will pay capital gains tax. Correct? Now apply the same rationale here also. Company is there going into liquidation. At the time of liquidation, company is selling the debenture or distributing the debentures to the shareholders. Company purchased it at 20 lakh, that part. 20 lakh worth of debentures, it gave to the shareholders. But on the date of liquidation, the market value of the debentures is not 20, it is 25. Now what generally you have to do? Company, pay capital gain tax on that extra 5 lakh. Like that you have to ask or not? Correct? That is the correct point. But lawmaker said that if fiction is created through section 46 saying that this is not considered as a transfer in the hands of company. As a CA final student, when you are reading this provision, what should come into your mind first? You should not bloody read the point like this. Company, whenever it goes for liquidation, any distribution of assets made at the time of liquidation shall not be regarded as transfer. Shall not be regarded as transfer. But why? What could be the reason? Same thing, na? If company sold debentures worth 20 lakh at 25 lakh, capital gain will be charged. Okay. At the time of liquidation, you are distributing assets which are worth 25 lakh to the shareholders, which you acquired at 20 lakh. Full value of consideration will be 25, and capital gains has to be charged at 5 lakh or not. You can do like that. Why you did not do? Two reasons. Number one, tax has to be paid in the next year. Next year, the company are not there, then who will pay the tax? That's question one and answer. But most important, another reason is there, where nowhere you might listen to this. So listen carefully. What could be the reason why lawmaker is exempting company from transfer definition or company this distribution of assets at the time of liquidation? Now listen. There is a company. Assets, cash. Or I will write like this, cash and other assets. Okay, cash and other assets. Cash 50 lakh, other assets 100 lakh. Okay, this is one point. So share capital 100, reserves and surplus 50. No liquidation. What is the first one? No liquidation. Liquidation not there. Then tell me, liquidation not there. At this time, other assets like debentures are 50 lakh, equity shares are 20 lakh, fixed assets are another 30 lakh. This is a division for this 100. Normal time, if company gave these debentures, what will happen? Company acquired at 50. While it is giving to some other person, it is 55 lakh. Whether you charge or not, if you charge, okay, or else it will be treated as a gift. Okay, for you, the full value of consideration will be the fair market value of the assets on the date of transfer. Okay, fair market value of the assets on the date of transfer. We read now where any person receives from any other person or persons any movable property, it will be treated as a gift. Na? So therefore there will be a taxability. Even in that case. So 50 lakhs to 55 lakhs you have charged. You sold. Then what will happen? Full value consideration 55 lakh. Cost of acquisition will be 50 lakh. Capital gains will be 5 lakh. Okay. This is the point. Now second question. Now company is in liquidation. Cash 50 lakh. Other assets 100 lakh. Debentures 50 lakh. Equity share 20 lakh. Fixed assets are 30 lakh. Share capital 100 lakh. Reserves and surplus 50 lakh. Okay, reserves and surplus 50 lakh. Now my question is very clear. Okay, see here. Cash 50 lakh. Other assets 100. Debentures 50 lakh. Equity shares 20 lakh. Fixed assets are 30 lakh. Share capital 100. Reserves and surplus are running at 50 lakh. This is normal. Now company goes into liquidation. Same thing whatever I have done now. Now I am distributing these debentures, okay, to the equity shareholders of a company at the time of liquidation. To the equity shareholders I am giving. I purchased at 50, undoubtedly. But now the price is 55 lakh. Normally you would have considered the full value consideration as 55 lakh and you might have charged the cost of acquisition 50 lakh. Tax will be levied at the rate of 5 lakh capital gains tax, correct? But lawmaker through section 46 a fiction is created saying that all this is not a transfer. Why? When before liquidation if I do same is a transfer, why same is not becoming a transfer at the time of liquidation? Two reasons. Reason number two, if I treat it as a transfer, who will pay tax on that 5 lakh? Company. Where is company? You have to pay after 1 year. After 1 year company will not be there. It is liquidated. How company will be liable? So that is reason number one. Reason number two is, this is the most important reason. Okay, this is the most important reason. You are giving debentures. Okay. Here also you are giving debentures to some other person. Here also you are giving debentures to some other person. Here the motive to sell the debentures is sale. Here the motive to distribute the debentures is not selling debentures. My motive is not to sell and make profit. My motive is to compensate for these two. Sir, I didn't understand what does it mean. Listen. Koushik Mukhesh started a business, okay, with 100 rupees. He made a profit of 50 rupees on that. 100 rupee capital invested, 50 rupee profit made. Now 100 rupee belongs to KM, 50 belongs to KM, or total 150 belongs to KM. 150 belongs to KM. Same thing happening also here. Owner being the shareholder is not eligible just to the share capital and reserves. He is eligible to everything. Both share capital and reserves both belongs to him. Both belongs to him. But when company goes into liquidation, what will happen? This 100 rupee share capital will close. This reserves and surplus 50 lakhs has to be given. Okay, given in which form? Given in the assets form. Now you are saying that I am giving you debentures, but company will tell that I am not giving you debentures here. I am giving you compensation for this 150 lakh in the form of debentures. So you are seeing debenture. Company is seeing compensation for shares and reserves and surplus. Shares and reserves and surplus. Now you tell me. Now you tell me. For example, share capital 100. Reserves are 50. Totally 150. 100 on 150. 100 on 150. Okay, you can calculate the 50 on 150. 1/3. 50 on 150. 1/3. Okay, wow. Next, if you see this clearly, 50 on 150, 1/3, 100 on 150, 2/3. Okay, wow. So 50 on 150, 1/3, 100 on 150, 2/3. Means what? In every 1 rupee you distribute to the members. Okay, in every 1 rupee. See, okay, see here. How much capital we invested? 100. How much reserves we pooled? 50. E 150 are reflected in the form of assets. Okay. Now when company goes into liquidation, these will vanish. Okay. But who is the owner of this 150? Shareholders. When these vanish, you should not cheat them. Na? That 150 you should give in some other form. What is the form? Therefore, you are distributing assets. Means here my company's motive is not to sell the debentures to someone and make profit. Motive of the company is to compensate for the share capital and reserves and surplus. Share capital and reserves and surplus. Are you understanding? And in this 150, what is there? Share capital money is there. Reserves and surplus is also there. To the extent of reserves and surplus, I will call it as a deemed dividend because this accumulated profits being reserves and surplus, if you would not distribute, you would have paid dividend. You would have paid dividend. So therefore, I will call it as a deemed dividend. I will call it as what dividend here? Deemed dividend. Hopefully everyone understood the concept now. So this is very, 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 very in-depth and technical in understanding. Generally, if a student read, nothing will be there. But if you go deep into the intentions of the lawmaker and read, it makes a lot of sense. So therefore, what is the lawmaker intention in bringing this section? Please do not call this as a transfer of assets by the company. See here. Other assets are there. In this other assets, debentures are there. Agricultural land is there. Debentures are there. Agricultural land is also there. To one of the promoter of a company who is also a member, company said that I have to give you some money now. Okay. 20 lakh worth agricultural land is there. Take it. We will register you in your name. Now you answer my question. What is distributed? Agricultural land. Sir, agricultural land is not a capital asset. Therefore, capital gains will not get attracted. Sorry, capital gains attracted or not, leave it aside. But one thing is clear. I transferred agricultural land with an intention to sell agricultural land or with an intention to compensate for share capital and reserves you invested. Share capital and reserve. You are seeing agricultural land. Company is seeing compensation for the share capital and reserves and surplus. Therefore, assets is the word used in the section but not the capital asset. Even this distribution also will be considered as distribution only. Clear everyone? So point number 1. Company ki no capital gains tax. Company ki no capital gain tax. Okay. But what they said is, see here, how much this is? 150. Now again, recast the balance sheet. Share capital, reserves and surplus called as accumulated profits, cash, other assets. 50, the 50, 50, sorry, 50, 100, 100, 50. What is this 150? This 150 is nothing but reflection of share capital and reserves and surplus. Correct? Hey, you purchase assets. How you purchased assets? By stealing money, by theft? No. Someone have given the money. Either it should belong to the equity capital or from the reserves you purchased. Means you are seeing that I am giving you assets. Don't see that I am giving assets to you. I am not giving assets. I am giving your capital back to you. Are you understanding or not? I am giving your capital back to you. What you gave, I am giving you back. What belongs to you, I am giving you back. I am not selling anything to you. Therefore, they said in the law that don't treat it as a transfer in the hands of company. Number one discussion over here. That's why what law has said. If a company distribute any assets to the shareholders, such a distribution shall not be treated as a transfer under 46(1). Okay. Assets includes capital assets also, and normal assets are also included. Therefore, 45 won't get attracted, 48 won't get attracted, capital gains won't get attracted. This is all in the hands of company. Okay. Next. Now see, dividend includes any distribution made to the shareholders of a company. Any distribution made to the shareholders of a company. Okay. Now listen carefully. Why the word assets are used in the section? Why not capital assets? Because you see capital asset and other assets for liquidation sake, for the purposes of 46. They use the word where the assets. But in reality, we are not selling assets. We are giving back your share capital represented by assets. We are giving your share capital represented by assets. Therefore, you see assets, capital assets. I see giving back your capital and profit. That's all. Therefore, any distribution made, okay, to the extent which it is attributable, sir, attributable means proportionate. Okay, proportionate. Accumulated profits of the company immediately before liquidation, whether capitalized or not, shall be deemed as a dividend. Shall be deemed as a dividend. Means what? Whether it can be capitalized profit, whether it can be non-capitalized profit. Okay. What we discussed on that day. Company is going into liquidation. Okay. It made distribution of assets. You are seeing assets. We are seeing distribution of share capital and reserves and surplus. Okay. So therefore, don't bifurcate between capital asset and non-capital, because company is not seeing distribution of assets. Company is seeing only reserves and surplus and share capital giving back. Since I can't give back reserves and surplus in reserve form, since I can't give shares in shares form because company is going to close and shares are no more there, whatever is represented by these mirror images, which are the assets of the company, we are giving that. We are not selling assets. We are giving your share capital. We are not giving assets. We are giving your reserves and surplus. To the extent of reserves and surplus, it will be deemed as a dividend. Logically right. So, to the extent of accumulated profits, whether capitalized profit or non-capitalized profit, it will be treated as a dividend. Accumulated, I told you what is this. Okay. Tax implication on liquidation special case. See, where a shareholder on liquidation of a company receives any money or other assets from the company, he shall be chargeable to income tax under the head capital gains in respect of the money so received or market value of other assets on the date of distribution as reduced by the amount assessed as dividend within the meaning of 222C, and the sum so arrived shall be deemed to be full value consideration for the purposes of section number 48. I already discussed about this. Let's see. There is a company. That company made a distribution of money or other assets to the shareholders. Money or other assets. Other assets. They did not use the word capital assets. They use the word other assets. So, where a shareholder on liquidation of a company receives any money or other assets from the company, he shall be chargeable to tax under the head capital gains. Other assets also capital gains. In respect of money so received or market value of other assets as on the date of distribution, as reduced by the amount assessed to the deemed dividend under 222C. Sir, what does it mean? See, there is a company. That company made a distribution of money or other assets to shareholders. Capital gains need to be computed under section number 48. Logically, I explained through the case laws also. J. Krishna Harivallabh Das and Vijay Kumar Budhia, Supreme Court case judgments, on the basis what they said, whenever company goes into liquidation, upon liquidation, company will come into an enda. Shares of the company also will come to an enda. Okay, now rights on the shares are going. Rights on the shares, if it end, it is a extinguishment of right. Extinguishment of right is a transfer. Okay, for the representation of shares which are extinguished, we are giving the assets. Therefore, don't treat it as an asset, treat it as a share capital and reserves and surplus. Okay, so company went into liquidation, distributed as a money and other assets to shareholders. Okay, money and other assets. Sir, already I paid deemed dividend. To the extent you paid deemed dividend, I will not tax you again. To the extent where you are not taxed under deemed dividend, then you will be taxed under the head capital gains. Capital gains. Sir, other assets, agricultural land is there. Sir, agricultural land is also charged to capital gains. Pakka it will be taxable. Sir, why sir? Agricultural land is not a capital asset. But this section is a exemption to that. Na? Just a minute. See here. This section is an exemption to that. Na? That's why notwithstanding anything contained in section number 45, the 46 has started. Okay. Means what? In that particular assets, if agricultural land is there, that also will be taken into computation of capital gains. Reason I told you very clearly. Don't talk that it is, don't say that it is agricultural land. Say that it is given as a representative of share capital and reserves and surplus. Share is a capital asset. Share is a capital asset. Your rights are extinguished. Okay. Originally, you are a shareholder. If you are a shareholder, you will get a right to the share capital. Because of that, you have a right on assets. So, shares say represented through assets, because out of the share capital money, you purchased all those assets. From whose money you bought? From stealing 100 rupees share capital, 50 rupees reserves and surplus, 100, so you purchased assets. And that asset of 100 purchased out of what money? Share capital. I am going to give back that share capital to you. So don't see that I am giving agricultural land. I am giving shares back to you. But since company is going into liquidation, I am not giving you in the form of shares. I am giving you in the form of assets. Okay. So therefore, bifurcation of capital asset and normal asset is not happening in section 46(2). So extinguishment of rights is a transfer. But I will give you one problem now. If you do that, all doubts will get cleared. One stretch light will get cleared. Previous year of chargeability will be previous year of distribution. Because liquidation, once court order, that's it. Company is no more there. Liquidation started. Means rights in the shares are extinguished. Therefore, the year in which order of court comes for liquidation, that year is the year of transfer. Okay, sorry. That year is the year of transfer. Yes. But capital gains, when now I can charge? Capital gains can be charged only if distribution happened. Receives, not liquidation. Okay, it should be received. Okay, so previous year of chargeability will be previous year in which it is distributed and I received. Are you clear? Understood? So therefore, if you want, I can make a cross reference to this. See this one. Clearly receives any money or other assets. So receipt is important. Okay, receipt is important. If you receive, then taxability also will come into picture. Okay, liquidation ki year of transfer, chargeability ki distribution year is the same. Both happens in the same year, no problem will come. Okay, but exam law unnecessarily if we wanted to torture you, he will give 2 different years. Okay, March 20th liquidation order passed, May distribution happened, means 1 year transfer happened, another year tax will be paid. Understood? Okay. Full value of consideration. Full value of consideration. Capital gains key. There is a schedule of 48. Full value consideration minus cost of acquisition. What is the full value of consideration? Full value of consideration is the money and fair market value of other assets you received minus whatever is already taxed as a deemed dividend. Whatever is already taxed as a deemed dividend. Okay, well, so cost of acquisition is cost of acquisition of the shares. Cost of acquisition of the shares. Sir, you can understand this with a numerical illustration, which I will do at the end. Then I will again come back and I will show you the reference to each and everything I have written here. Then all eyes opened. Okay. Here, life never you will get a doubt on liquidation concept. Next, period of holding. What period of holding? Hey, if you have to charge capital gain means you should tell whether it is a short term or long term. Okay, see, imagine, again go with imagination. Virtually you should visualize and imagine. Balance sheet of a company. Company is transferring me debentures. Imagine, company is transferring debentures. See, when I said imagine, literally close your eyes and imagine the balance sheet. If you open the eyes, what will come? So if you open the eyes, something you will see. Mind will not concentrate. That's why yogis always close their eyes. Such that vision, if you see, automatically mind will go into that. So listen again. Again start. Balance sheet. Balance sheet la assets. Assets la debentures. You visualize like what I said, never you will forget. Company is giving these debentures to the shareholders. Shareholders are taking this. You are telling pay tax on this. Okay, pay tax on this. What will be the full value consideration? Market value of the debentures. You received any other money? No, I did not receive any other money. Okay, you received only fair market value. You received only debentures. Yes, fair market value at which you received it will be the full value consideration. Okay, minus cost of acquisition. Minus cost of acquisition. Now the question arises, what should be the cost of acquisition to me? How much I should write? That question will arise now. That's why what they said, cost of acquisition will be cost of acquisition of the shares. Cost of acquisition of the shares. Sir, I didn't understand this. That's why I will show one numerical example. Then full clarity. So there is a section called as section 2 class 42A. Read with explanation 11A. In determining the period for which any capital asset is held by the assessee, in case of a company, in case of a share held in a company in liquidation, there shall be excluded the period subsequent to the date on which company goes into liquidation. So, company goes into liquidation on 25th March. Distribution happened on 5th May. That 25th March to 5th May period, you should not consider. You should not consider. Only up to the date of liquidation, you should consider as a period of holding. Period of holding. How it will be? I will show one question. Period of holding end on the day preceding the date of liquidation. Okay. Next. Tax implications on subsequent transfer. Sir, what is this tax implication on subsequent transfer? Super point here. See. Listen. I will first show you this point. Take a minute time. Read all the blue color points are there. I will make it full screen. Read all those. Then we will be going into the next segment discussion. Okay. Enough time given. Okay. Let us begin. See here. See here. Understand properly. What is this tax implication on subsequent transfer? Listen. Company assets are transferred to shareholder. Okay. Company assets are transferred to shareholder. What we said, company transferred any asset, that can be capital asset, that can be any other asset, anything is transferred to whom? To shareholder. Why it transferred? As a compensation to the shares and reserves. Therefore, don't see it as an asset transfer, see it as a shares and reserves. Extinguishment of shares, they paid this as a compensation. Therefore, it will be treated as a transfer in the hands of shareholders, and therefore capital gains will be taxed in the hands of shareholders. Clear, everyone? Capital gains will be taxed in the hands of shareholder. How computation will happen, I will show you. Then on this also you will get a clarity. Okay, you may not get clarity on this. That clarity will come once you do a question answer. Next. Now the real question starts. What is the next question? See, company went into liquidation, distributed assets to me. I will pay capital gain tax. I means here the shareholder. How? Under this scenario, we will pay tax. How? With an example, I will show you. Then you will get full clarity. Then I will again come back and I will show you. Then lively again, you will not forget this. Is it over? Understood. Now, subsequent transfer. What do you mean by that? Company transferred debentures to shareholder as a compensation to the shares and reserves. Okay, capital gains is computed first. When previous year of chargeability will be the previous year of distribution. Previous year of chargeability will be previous year of distribution. Okay, what will be the value? Full value of consideration will be the money and other assets and Any kind of benefit that you receive minus a deemed dividend which you are already computed, balance will be the full value of consideration that you need to charge. Okay, full value of consideration, that money, minus why you are getting these assets as a consideration to the shares, minus share capital, whatever the shares you acquired, that money. Sir, I didn't understand. That's why I said listening is important. Company went into liquidation, money given to you, along with debentures also given, money and money plus fair market value of debentures you take, minus already chargeable to dividend is there, minus balance will be the full value of consideration. Now question, we have to compute capital gain. Capital gain means what? Full value consideration minus cost of acquisition. Correct? Now question, why company is distributing you? Why company is giving you these debentures and cash? As a compensation to the shares you acquired. Therefore, the cost of acquisition of those shares in that company you have to reduce. Other cost of acquisition of shares here. Seri. Balance will become the capital gain. Problem though, you will get full clarity. Now question is not that. Now the question is, I am again transferring those debentures. While I am acquiring debentures, you are computing capital gain. Now after 3-4 years, I am selling those debentures. Okay, now listen carefully. When you sell the debentures, subsequent sale time, you are not a shareholder of that company, and company is not selling the asset. You are selling the asset. Being a shareholder who received debentures, you are selling them. Therefore, in that case, only capital asset transfer will attract capital gain. That's why where the capital asset become property of the assessee, not any other asset. Where capital asset, in our example, debenture, became the property of the assessee on the distribution of capital assets of a company on its liquidation. The assessee has assessed to tax under section 46. Yes, 46 law already we are assessed. Okay, a 46 2 law assessment. So assessed to tax under 46. Now what is the cost of acquisition of that particular debentures? Now I am selling those debentures now. Fair market value of the debentures on the date of distribution. Not on the date of acquisition by the company. Distribution time, whatever the fair market value is there, that will be the cost of acquisition of those debentures. Cost of acquisition of capital assets. So what is the cost of acquisition? The cost of acquisition will be, so in simple language, if I have to tell, this is what you wanted to tell. So cost of acquisition of the capital asset on the date of capital asset acquired on distribution will be the fair market value of capital asset on the date of distribution. See what happened. There is a company, goes into liquidation, distributed capital assets to shareholder. Okay, anyway 46(2) will get attracted for this and we are taxing them. Very good, over. Now he is selling such capital asset to another buyer. Now this will become a proper transfer because we are directly selling. So section 45 gets attracted, 48 also will get attracted. Full value of consideration will be sale value, at what price you are selling. But what is the cost of acquisition? The fair market value of the debenture on the date of distribution. Okay, this is what said in 55 subsection 2 class B subclass 3. Period of holding starts on the date of distribution by the company. Okay. Sir, what is this? This point I will keep it aside. I will discuss once we do one illustration. See this. First, I will give you 3-4 minutes time. Copy down this illustration first. Okay. Copy down this illustration first. Copy the facts at least. Why I am asking you to copy now? While writing, read and write. Again, life you will never forget this concept. This question contains every point what we discussed till now. Every, mark my words, every point. Do this question, that's it. Again, life again, don't do liquidation concept. New income tax 2025 also provision is same. So please do properly. Copy. Okay. Enough time given. Listen. Why I ask you to copy this is you will know the tax implications only when you absorb the concept in your mind. There are so many numbers in this question. Observe one by one. Okay. We are going to do a grand illustration on liquidation. This was not an examination question. Examination question they are asking normally only, not this much depth. CA final exams. Interla they are asking only general question. But learning should not be general. You might have done at inter level normal liquidation question, but this is in-depth understanding of liquidation question such that it encompasses section number 46.1, 46.2, section 55, subsection 2, class section 55, subsection 2, class 3, subclass 3. Along with that, we will cover section number 2, class 22, subclass C. So 55 subsection to class B, subclass 3, that also will get attracted. All sections in one place if you have to learn. This is the place. Okay. Now I will go back to whatever I have written in the hand notes and I will explain what is the relevance of our discussion till now on liquidation. Okay. With this, you will get full clarity. Let us see. See here. Okay, I'm copying the question here such that I will do working here and I will show you. First of all, let us read the question first. Okay, let us read the question. X purchases 4,000 equity shares of Y Limited on 16th April 2004 at rupees 2. 2 rupees from some person he purchased. Okay. Okay. Which company shares? Y Limited shares. They purchased. Purchased on which date? 16th April at rupees 2 per share. Y Limited goes into liquidation on June 30th, 2024. Liquidation date is June 30th. What is the distribution date? They did not give anything. Then we will assume that the date of liquidation and date of distribution both are same. And a previous year of liquidation and previous year of distribution both are same. Okay. So both are same. Previous year of distribution and previous year of liquidation both are same. So previous year of transfer will be the previous year of chargeability of tax. So 24-25 previous year it happened. 25-26 will pay the tax. How much will be assessed to tax is a question. Balance sheet as on the date of liquidation. Let us see. 40,000 equity shares of rupees 10 each, 4 lakh, par value. Next, accumulated profit 30 lakh. 10,000 debentures of Z Limited, 28 lakh. Cash in hand, 6 lakh. This is the situation of this company. 34 lakh on both the sides. Now, 10,000 debentures of Z Limited, 28 lakh. Na? What is this 28 lakh? This is a fair market value of the debentures. Debentures are listed. Therefore, they are acquired by the company at 9 lakh. Okay, on 1st May 2023, on 1st May 2023, which are now trading at 28 lakhs, which are now trading at rupees 28 lakhs. Okay, now listen carefully to the point. So 10,000 debentures of Z Limited 28 lakh, cash in hand will be 6 lakhs, totally 34 lakh. Assets are distributed to shareholders. Very good. So because shares are going out now, why liquidation means shares will get cancelled, but to them something you have to give now. Shareholders fund is how much? 34 lakh. It's not 4 lakh because just now I told one example. Maybe half an hour back I told one example. KM started a business, 1,000 lakhs he 1,000 rupees he started, he got 500 rupee profit. Now my money is 1,000 or 500, both 1,500 or 1,500. Therefore, what is the shareholders fund? 4 lakh and 30 lakh. Both belongs to the shareholders only. Okay, cash in hand 6 lakh, 10,000 debentures of Z Limited, 28 lakhs. Up to here, everyone understood? Clear? Those debentures are acquired by the company at 9 lakh. Okay, date of acquisition is 1st May 2023. Now, question number 1. Listen carefully. Company is distributing these assets to the shareholders. Okay. Now, you will tell, sir, company acquired these debentures at 9 lakh. Okay, in 2023, giving those assets to the shareholders for 28 lakh. Therefore, 9 lakh to 28 lakh, there will be a gap. There will be a difference or not. So 19 lakhs. On that 19 lakhs, company has to pay the tax. No. That's why we discussed clearly. This transfer of assets is not a transfer in the hands of company. This is meaning. Now through numbers, if you see, let's go back. Where assets of the company are distributed to the shareholders on its liquidation, such distribution shall not be regarded as a transfer by the company for the purposes of section 45. Therefore, whatever the 28 lakhs of debentures that are distributed to the members, okay, these will not be treated as a transfer in the hands of company. Why, sir? They acquired it 9 lakh, they sold it 20, they gave it 28 lakh. Therefore, there is a capital gains, tax it, balance 19 lakh, charge it to company. Now, problem number 1. 19 lakhs you will charge it to company. Company will pay tax. When it has to pay tax, 2020, by the time company are not there, then who will pay the tax? This is problem 1. Problem number 2 is, why this 28 lakhs worth of debentures are given? That question I asked 100 times today. These 28 lakh worth debentures are not sold by the company, not given to gain benefit. It is given as a compensation to these two. This 34 lakh distribution is not a benefit type of transaction. It is a distribution of these two. Don't call it debentures by company. Company is giving back the share capital and reserves in the form of debentures. In the form of debentures. Debentures in this, if land is there, if agricultural land is there, that also will be considered. Any asset that is transferred will be taken, because you should not see distribution of these, you should see these two are distributed in this name. Pair debenture and cash, actually distributing these two. Okay, because you are extinguishing the rights on these two, as a compensation we are giving these two. So company will not see these, company will see these. These belong to whom? You only. Your money I am giving to you. Therefore, I am not transferring to a different person. I am giving your money back to you. Therefore, it is not a transfer in the hands of company. Clear? So, now justification was given to 46(1). Okay? Next. Let us go to 2 class 22 subclass C. What they said. Now, what we are doing now? With the help of the problem, we are going to link the sections and understand. Okay. Any distribution made to the shareholders of a company on its liquidation, to the extent to which distribution is attributable to accumulated profits of the company immediately before liquidation, whether capitalized or not. Sir, how to understand? See here. Now, tax implications in the hands of shareholders, let us see. Okay. First, two things. Company, shareholder. Company hands, nothing is taxable. Shareholder stands. Shareholder stands again two branches. Branch number 1. Shareholder stands branch number 1. What is the branch 1 in the hands of shareholders? The first branch will be deemed dividend, or I will tell this way. Upon distribution, two sections will get attracted. Deemed dividend under 222C, capital gains under section 46(2). To what extent capital gain? To what extent deemed dividend? Now we are reading bare act with an illustration. Never get a doubt. Now, upon distribution, first, to the extent of accumulated profit will be taxable here. Sir, how to understand this? See here. See the query. Equity share capital 4 lakh. Accumulated profit is 30 lakh. Correct? Okay. Now tell me, totally 34 lakh. 34 lakh la 4 lakh is the capital, 30 lakhs is the accumulated profit. 30 lakhs will be accumulated profit. Now second query. How many debentures this fellow got? 1000 debentures and also cash of 60,000. Both he received. Sorry. Now listen carefully to the point. How many shares I purchased? 4,000. I am a shareholder of 4,000. My shares are cancelled now because of liquidation. As a compensation to my 4,000 shares, I am having a right on two things. To the extent of my 4,000 shares, I have a right on share capital. I have a right also on accumulated profits. Okay. Now listen carefully. See. $4,000 shares on 40,000 shares means what is my shareholding percent? 10%. What is my shareholding percent? 10% is my shareholding. Okay. So I am having a right on 10% of what and what? I am having a right on 10% of share capital and 10% of accumulated profits. Okay. 10% of share capital comes to how much? 40,000. 4 lakh 10%. 4 lakh 10%, 40,000. Accumulated profits are 10%, 30 lakhs into 10%, 3 lakh. So I should receive 3 lakh 40,000 now. Perfect. See here. Company has to give back 3 lakh 40,000. Company will see only this thing. I have to give back your share capital 10%. I have to give back your reserve part 10%. Both together 3 lakh 40. But I can't give reserves. Reserves are already in the form of assets. I can't give you shares. Shares are already in the form of assets. Since I can't give you shares back, which are already with you, and reserves, I am giving you represented assets. Therefore, 2,80,000 plus 60,000 makes exactly 3,40,000. Okay. So therefore, I am giving back your 3,40,000, but in the name of assets. Company will not see it as an asset. Company will see it as a compensation for the shares and accumulated profit. Clear? Now tell me. Now tell me. How much accumulated profits I received? 3 lakh. So totally I received 3,40,000. Okay, va? Totally I received 3,40,000. In this 3,40,000, how much is the part of accumulated profits? 3 lakh. To the extent of 3 lakh, it will be taxable under the head IFOS as a deemed dividend under section 2 class 22 subclass C. So 3 lakh. Okay, va? Now balance how much is there? 40,000. So in this 3 lakh already we taxed. Balance how much is there? 40,000. Okay. Now listen. Capital gain ki how much should be taxed? What they said? Any money received 60,000. Hey. You should observe. Observation. Money received 60,000 plus fair market value of, see here, other assets received, debentures. Okay. What you received? Fair market value of debentures 2,80,000. Sir, 3,40,000 will be taxed. No. Minus deemed dividend amount already taxed 3 lakh. Balance how much is there? 40,000. So 2,80,000, 60,000. Totally I received 3,40,000. In that already how much is chargeable to deemed dividend? 3 lakh. Balance of 40,000 is there na? That will be chargeable to, that will be treated as a full value of consideration. Full value of consideration for capital gain. Are you understanding her? So listen. Full value of consideration is 40,000. Okay. What is capital gain? Capital gain is full value consideration minus cost of acquisition. That will be capital gain. Now the question arises, sir, what you received? You received compensation for your shares investment or compensation for your investment made in the company. Okay. That means I made investment in 4,000 shares. Because of becoming a shareholder for 4,000 shares, I am getting right on share capital, also on the reserves and surplus, also called as accumulated profit. Therefore, to the extent of my shareholding, they gave me. Correct? Now listen. Listen. Full value of consideration for capital gain is what? Money received. Okay. Taken 60,000. Fair market value of other assets minus 3,40,000 minus cost of acquisition. Means what? You have to calculate capital gain, means you have to reduce the cost of acquisition or not. Total 40,000 is not taxable. Total 40,000 is not taxable because I acquired the shares at some value. 4,000 shares at 2 rupees each. Means what? 8,000 minus 8,000 will become 32,000 chargeable to tax under the head capital gain. Under the head capital gain. See the beauty now. You purchased long back 8,000 worth shares. After 20 years, you received 3,40,000. Okay. So how much is the extra amount you got? 3,32,000 extra I made. In this 3,32, 3 lakh to the extent of dividend profits, you are taxable under the deemed dividend concept. 32,000 you are taxable under the head capital gain. Claps to the government of India for distributing the income like this. Understood the point or not? Exactly same amounts. 3,32,000 is divided into two parts now. One part they have taken as an accumulated profits and charged it to deemed dividend. One part is chargeable under the head capital gain for 32,000 rupees. This is how lawmaker wanted to tax you. Clear? Okay, over. This is one part of the story. So we computed. So question what they asked us? They asked us to compute tax consequences. On distribution we computed. But this fellow did not stop there. This fellow transferred on 6th April. Transferred on 6th April. 1,000 debentures for 3,10,000. Which debentures? Debentures which he acquired from the company. Acquired from the company. See. Subsequent transfer. Okay. Subsequent transfer. I sold. Full value of consideration. 3,10,000 I sold the debentures. Minus cost of acquisition. Cost of acquisition. Now you think and answer. Cost of acquisition, you will take cost of acquisition to the previous owner, cost of acquisition to you is a question now. Okay, you will take cost of acquisition to the previous owner or your cost of acquisition. What we need to take? You should consider your cost of acquisition. Okay, what is your cost of acquisition? 2,80,000. 2,80,000. Because cost of acquisition will be whatever you have already charged here. Fair market value of debentures. Are you understanding? Are you understanding? See, that's why I have written this section. Cost of acquisition will be fair market value on the date of distribution, not the fair market value to the previous owner. Okay, so fair market value on the date of distribution. On the date of distribution, what is the fair market value of this particular debentures? 2,80,000. 2,80,000. Minus 2,80,000. How much will be charged now? 30,000 will be charged to capital gain if you subsequently transferred. See here. This is how the answer has to be presented. Examiner. So, first one. This is because of 55 subsection 2 class B subclass 3. This is because of section 46(2). This is because of section 2 class 22 subclass C. This is because of section 46(1). See the answer. Tax consequences in the hands of company. As like this, you have to write your answer in exam because these are 6 marks question. As per section 46(1), distribution of assets by the company at the time of liquidation is not a transfer. Therefore, no section 45, no section 48, no capital gain. Nothing is taxable in the hands of company under the head capital gain. Tax consequences in the hands of shareholders. This has to be calculated in 2 different scenarios. Upon distribution, 2 sections, deemed dividend, capital gains. Upon retransfer, section 55, subsection 2, class B, subclass 3, all these will get taxed. So upon distribution, as per section 2 class 22C, any distribution to the extent of accumulated profits is a dividend. My percentage of shareholding is 10%. 10% of share capital comes to 40,000. Actually received is 3,40,000. Means debentures and cash. Amount paid out of accumulated profit. Share capital part is only 40, but you received 3,40,000. And from the share capital they paid you 40, means balance might be paid out of what? Out of the accumulated profits. That will be deemed as a dividend. So taxable under the head IFOS. Next, as per section 46(2), any distribution over and above deemed dividend component, money received is 60,000 plus other assets are 2,80,000 minus deemed dividend, full value of consideration 4,40,000. But this 40,000 I did not get free, na? I invested how much? 8,000 rupees in the shares. So balance will be taxable. This will be long term. Till the date of liquidation you have to take. This will be the long term because you purchased in 2004 and the liquidation happened in 2024. Long term. Next, on subsequent transfer of those assets, full value of consideration 3,10,000, cost of acquisition is 2,80,000, fair market value on the date of liquidation, on the date of distribution. So these assets, these debentures, I acquired on the date of distribution, 30th of June. I sold on 25th of April, 1 year also not completed. Short term capital gain 30,000. Period of holding will be 30th June 2024 to 6th April 2025, less than 1 year or 12 months. It is a short term capital gain. Now question arises. Final question for you. See, where capital asset became property of the assessee, okay, on distribution, here debentures, on its liquidation, the assessee has been assessed to income tax under the head capital gain in respect of that asset under section 46. Okay, under 46 means what? Under the 46(2), where a shareholder on liquidation receives any money or other assets from the company, he shall be chargeable under the head capital gain in respect of money so received, market value of other assets. I could not compute market value of the assets. I could not compute market value of the assets. There is no market value here. There is no market value for that. I couldn't compute it. Then what will happen? Market value could not apply. If market value could not apply, in our illustration, 2,80,000 you cannot consider. Okay, you have to consider only the cost part. Correct? Therefore, 2,80,000 you will not consider. You will consider the cost only, not the market value. In that case, what will happen? Instead of 2,80,000 here, you will take only the cost part. Okay. Therefore, you will reduce the deemed dividend here. Deemed dividend. Thereby these all will get reduced. That's why what they said, there is another section that came into picture to counter this. 49, subsection 1, class 3, subclass C. Tax implication if could not be charged under 46(2), where the capital asset became property of the assessee on any distribution of assets on the liquidation of company, the cost of acquisition of the asset shall be deemed to be the cost to the previous owner. Means, then in that case, what will happen? You will sell it 3,90,000. Okay, 90,000, 9 lakh is the total. In that 10%, 90,000. Then here 90,000 only will be there. The balance of 2 lakh or some amount is there, na? That entire amount you will be chargeable here. If you are saved here, you will be charged to tax here. Okay. So these are all the various segments of discussion that we made in liquidation of a company. Okay. You can see the answer now. You can pause and you can write. This is one answer. This is another answer. You can pause it. Okay. With this, we completed next segment discussion called as liquidation of company. Tax implications on liquidation. Next segment is reduction of share capital and capital gains. Okay. Let's begin. Next video I will be putting you reduction of share capital.